Hello, good morning and welcome. You've tuned in to ET Now and you're watching Buy Now, Sell Now with me, Varun Hiremat, and along with me, Karunya Rao. Let's take a look at the markets this morning. Unfortunately, it's another day of losing for us. 14,135 on the Nifty. We're down almost a whole percent, 103 points down as we speak. And it's not just the frontline benchmark today. It's not the Nifty, it's not the Sensex, it's the broader markets, which are trying but still bleeding. The midcap index is down also almost a percent. The banking index is down 0.7%. Financial services index down 1%. Small cap index turning negative as well. If you want to pay some specific attention to, what the sectoral moves are a little more, let's just get you a feeling of what the breadth is there. Small cap is actually just showing a hint of positivity, up 0.3%, and the small cap 50 is up 0.5%. So that's the only two areas of green that I can spot. FMCG, IT, and media marginally green, but look at Pharma today; it's down 1.5%. Private banks down 0.8%. Realty down 0.6%. So difficult market breadth, few pockets shining out. In terms of just top Nifty performers and gainers, 34 are declining right now as we speak. So we have very few stocks advancing, but Wipro and TechM, so IT showing some resilience. ITC, Bajaj Auto and Grasim post that entry into paints, still looking a bit positive. But IOC, Tata Motors, UPL, Sun Pharma, Hindustan Unilever, which have all been decent performers lately, taking it a bit on the chin today and cooling off. So let's see, perhaps we'll rebound later on during the course of the session. But for now, we're pretty much trading at the low point of the day, and it's seeming like quite a tough wall we need to climb. So that was on markets. I believe we have the BNSN stock cloud as well that needs to be addressed. 10 stocks that we're bringing to your attention for various reasons. So let's just have that come up on your screens. It's leading today with L&T. Of course, we just caught up with the management this morning on ET Now. They posted a very strong Q3. They're not even giving any guidance because they're saying performance speaks for itself, and it's been so strong. The order book is the biggest they've seen in over a decade. So L&T looking quite good today. ICICI Securities, although the stock is not performing, very strong Q3 market share, momentum continuing. They've launched a zero-cost brokerage, so that should aid going forward. We then have a couple of auto stocks that are also hinging on recovery. So you have Ashok Leyland and Tata Motors in there this morning. FMCG making an appearance today as well. You have HUL and Marico. HUL is one of the stocks that's taking it on the chin today. You have RIL, which has broken a key 200 DMA today. So let's see what comes next for that one. It's trading below 1900 or just about there. Axis Bank, which will be seeing results today. Again, very important. All eyes on that one. And we'll get you a preview later on in the show. And then Nalco and India Cements as well, two utility stocks that are not faring all that great, but there's been some corporate developments there, so they're in the cloud today as well. Back to you, Karunya.
Well, let's take the market conversation forward. We have Kunal Bothra and Gaurang Shah joining us this morning. Hi gentlemen, thank you for joining us. Kunal, coming to you first with the Nifty testing about 14,100 levels on the downside. Where do you think we're headed? Especially, it's a critical week as well. We're expecting the union budget to be announced in a few days, on Monday to be precise. So, do you see the choppiness to continue?
Morning, Karunya. Good morning, Varun. Yes, I expect the volatility to continue. I expect that the India VIX could probably be perched at these current levels of 23, 24 plus, and it should maintain these kind of levels. We've seen India VIX rising up higher, just prior to budget on many occasions. So this doesn't come as a surprise as such as well. But I think the larger part of the trend, and the correction what we've seen the last 3-4 days is the fourth day on a trot for in the correction for Nifty, and we are now testing back that 14,100 support. So this is a very important and a critical support level. It's not just a psychological support for the index, but it's also a very important technical support where a lot of call options and put options, those kind of round strikes are the ones which tends to get gravitated towards. So I think this is a very important level for the index. One of the other indicators which I am watching very closely is the put call ratio. It's a very, I would say, very important and very critical indicator to watch the sentiment bend, for the markets. And I think as we speak, the put call ratios for Nifty and Bank Nifty, they are nearing very close towards the oversold territories. And whenever we've seen that happening, when these, PCR ratios, they enter into the oversold territory, and we see a strong bounce which could be leading into. So, if there is any kind of a correction further in the second half and the index drops back below that 14,000 level, I would expect a sharper reaction on the upside to come across in the next couple of days. So in that aspect, I would suggest a couple of buy calls and two separate themes which I'm identifying. One of them from the low risk bucket. The first one is one HDFC Life. The stock is trying to take support at the 660 665 zone. So if you remember Karnya, that almost a month or two back, the stock, when it broke past about that 660 hurdle, it started a strong uptrend for itself. It rallied more than 10 to 15% beyond that as well, and it's now come back to testing this support trend line. So I believe that this is an important zone for HDFC Life, and if the stock manages to take support over here, possibility of a restart of a trend could be very high. So I'm suggesting a buy with an immediate target of 715. Stoppers could be kept at 650 mark. The second would be a buy on a mid-cap name. It's about New India Assurance. Interesting chart. The stock has been forming a pattern of higher highs and higher lows in last 3-4 days, like what most of the market stocks have corrected. Even this stock has corrected, but it's coming back towards its 50-day moving average. So it seems to be that the stock is now coming back towards its support levels, continuing with the pattern of higher highs and higher lows. I would expect a bounce till at least 140 on this stock. So a buy with a target of 140 and stop us at 125.
Okay, thanks for that, Kunal. Buy on dip strategy. Gaurang, good morning. Hi. I know the Geojit view remains positive on the markets, and I've heard you say buy on dips as well quite a few times over the last few weeks. So I'm not going to ask you what your take is on the markets, but I'm going to ask you today at 14,100, where are you seeing value and what are your calls for our viewers?
Thanks, Varun, and morning to all of you also. Yes, these are great markets to get invested in, and especially in times like this, Varun. You had a truncated week. For this week, we had a holiday on fallback of 26 January. Tomorrow we have the F&O expiry, and when we return to work next week on Monday morning, we'll have the Honorable Finance Minister present the budget. So this market can throw some choppiness and volatility at you, given the kind of elevated levels that we were in. But our view at Geojit is that in these kind of times, I think it is only prudent to look at some strong fundamental large cap names, given the correction that you see and the earnings that we have witnessed, especially for the third quarter. With these points in mind, we have two recommendations. First one is Reliance Industries. So we saw third quarter numbers last week on Friday post the market close late evening. I think on all parameters they were in line, and in fact the O2C, that is oil to chemical business, has thrown a tremendous amount of positivity. Medium term target stands at about 2,300, and if I have to extrapolate it with a longer term time horizon, then on further improvement in earnings, I think we would not be surprised to see the stock going towards 2,600. So Reliance Industries is the first pick, and the second one is from the IT pack. Again, a bellwether stock in the IT sector, which normally sets the trend for the IT earnings, and that is TCS. Upgraded our targets to 3,700 on TCS. I think in times like this, investors, especially retail investors who don't want to venture out into uncharted territories and want to stick with the basic principles, our sense is that these two names makes a lot of sense. Buy on dips and hold it for a long period of time.
Okay. Thanks, gentlemen, for your view on the markets and for your stock ideas. Request you to stay on with us. We're right now moving on to my colleague Ruchi, who has an exclusive update on PSU privatization policy. Ruchi, take it away and tell us what you're picking up from your sources.
Well, this has been a long time coming. We are given to understand that the Cabinet and the CCEA that are set to meet today, in fact, the meeting is already underway, is likely to take up the PSU privatization policy. This is going to be very critical given the fact that in the upcoming budget, we are likely to see the highest ever disinvestment target also be given to DIPAM. At a time like this, when COVID-19 really put the government's entire privatization program out of a whack, now we're given to understand that finally the government has decided that privatization is going to be the way to go. They are going to focus on asset sales. They are going to focus on privatizing some of the weak public sector enterprises, some of the PSU banks, some of the profitable companies as well. In fact, we're given to understand that Nifty Aayog, along with various other departments in the government had drawn up this strategy. DPAM has finally been able to get all participants on board as well. And this is going to be critical because, as I said, apart from some profitable PSUs like we've seen in the past, BPCL, the government proceeding with the privatization process for BPCL, the government also working on the privatization process for Shipping Corp and Concor as well. We're given to understand that in the days to come, we will hear from the government on which are the other sectors as well where the government is likely to privatize. So, for example, the banking sector is going to be an important one to watch out for. Whether it figures in today's privatization policy or not is something that we will have to wait and see as to what the final shape the policy has taken. But as I said, this is going to be very critical because this is really going to lay down the pipeline in terms of what the privatization process is going to look like in the future. There's been a lot of push from various quarters, in terms of stakeholders. They've been pushing the government for pushing their asset monetization drive, their privatization drive, and looks like we're in fact a step closer with the cabinet today taking up the mega PSU privatization policy.
Okay, thanks, Ruchi, for getting us those details. All eyes on this important meeting. With that, we're slipping into a break. Request our viewers to stay on as we'll be addressing your queries on the other side.
Hello and welcome back to Buy Now, Sell Now. You're watching ET Now. Both our experts, Kunal and Gaurang, are still with us. So let's get on board the viewer queries right now. First one, very pertinent today. We have Dhaval Gandhi of Mumbai writing to us, and he's bought 200 shares of Axis Bank at 664 rupees per share. Should I hold or exit? Kunal, results today. Review indicates that it's all going to be very steady state for Axis, no red flags. And in fact, a lot of the brokerages now prefer Axis and ICICI over Kotak and HDFC because they've just not rallied as much. So what would you advise?
I would advise a hold on Axis Bank. I think banking stocks are going through a very strong uptick. We've seen many of the private sector banks, of course, HDFC, Kotak, being the leaders in that regards, doing exceptionally well. ICICI Bank has been following up, but I think Axis Bank as well has not done relatively bad as compared to the other stocks as well. So I for one believe that this banking rally and the rally which you're seeing into the private sector banks, should see more legs on the upside from a longer term basis. So I think if you're purely a longer term investor, then I don't see any reason why you should be worrying. I would recommend a hold on Axis Bank.
Gaurang, your view on Axis?
So, Karanya, historically speaking, large private sector banks have created wealth for long-term investors. And I think this trend is likely to continue for a pretty long period of time. As Varun was mentioning, numbers are for the third quarter are expected today, later on in the day. Our sense is that we are going to see a dip in the gross and the net NPA levels. Provisioning is likely to come down with the COVID-19 situation now stabilizing a little bit. And the numbers on the net interest income and margin front is likely to see a higher level, along with elevated level of CASA as well. So if I have to put all this thing in perspective and reflect upon the first and the second quarter earnings this financial year, then today's third quarter number are likely to be better. And fourth and the next financial quarter numbers are likely to be even better. We would not be surprised to see levels of 745 and beyond over a longer period of time. And I would humbly request this investor that if there are any red flags today on the numbers and if you see a lower level, then I think that will be a perfect opportunity to add to the stock. And for those investors who are waiting for a correction to get into Axis Bank from a long period of time, I think it will be a great opportunity as well.
Okay, there you have it, the verdict on Axis Bank. Query number 2 then, Dheer Bhardwaj writes to us from New Delhi. He wants to know if it's a good time to buy L&T and he wants our experts to suggest a good entry point. Kunal, from December onward, the stock has consistently seen a decent run-up from 1100 levels to now 1350. Is it a good time to enter or should he wait for the stock to sort of retreat a tad bit from these levels?
good time to enter L&T. And, remember, Karnya, that this was not one of the few large cap names which rallied the first when the market started to rally from the March 2020 lows. It was one of the late movers, late starters, and when you generally see late starting, moves in stocks which move up in a kind of a very strong and a ferocious manner whenever they start back their rallies, they tend to be more vicious and ferocious. And I think if you look at it in that aspect as well, L&T is not a high beta stock or a high beta candidate to give you returns on a consistent basis. But the fact that the stock has covered up the underperformance of the first 6 months of this overall market rally, that itself tells that the stock is due for much more on the upside. Now, if you get dips along the way, then yes, that should be taken as a good buying opportunity. If the overall market goes through a corrective phase, a second round of correction as such, then yes, these stocks will also probably give you some sort of a correction. But overall, the larger scheme of things, the way L&T charts have poised and look out for over the last 5-10 years, I think all of that indicates that 1300, 1350 zone is a good zone where you should start entering if you've not bought earlier.
Thanks for that, Kunal. So clearly quite bullish on the prospects of L&T. Gaurang, I'm sure you're aware L&T's order book has never essentially been this large. And, it's been one of the very good performers now, like Kunal was just pointing out. It moved late, but it's definitely caught up. So what's your verdict here? The management this morning came on the channel and they said, we don't even want to give guidance. Performance speaks for itself. So what do you have to say about that?
Speaks the kind of confidence, Varun, the management has. And let me say this, Varun, that for a cap goods engineering company, it is not only important to have a very strong order book, but it is equally more important to have the capability, capacity, manpower and experience to execute that order book, because it is only post the execution of the order book that those amounts get translated into earnings and reflect on the balance sheet. And erstwhile, normally when we speak about cap goods engineering, we always compare two names, L&T and BHEL. And we all know the past, the history of how BHEL has fared on its inability to get onto the execution as far as order book is concerned. And this company, L&T, I think BHEL, its incapability to complete the order book. And on the other side, you have L&T, which has got all the required capability, capacity, experience, manpower, technology. And not only does it have one single vertical, it has got different business verticals, which very strongly contributes to the balance sheet. And our sense is that three rather, hydrocarbon, infrastructure, and defense. These three businesses are going to contribute even stronger going forward. So if you've not bought, use opportunities on bad day. Start with a small percentage of your investable amount, maybe 25-30%. And on dips, go on adding to L&T.
Okay, great. So consensus thumbs up from both our experts. Let's move on. Jyoti Goyal of Delhi has written to us. ITC's cooled off a bit. She'd like to enter at the current level. So Kunal, on the charts, good entry point for ITC?
Yeah, I think this 200 level is a good zone for ITC. It's also a round of strike. We see a lot of covered call kind of strategies building up for ITC, and in that aspect as well. Somehow these round strikes and round figures, they act as strong support or resistance point depending on how the stock has been positioning earlier. So I think looking at the last 3 months of charts, the recovery from those 160, 165 zone, I for one believe that the stock is poised for strong upside on the longer term basis. But the only catch to this short term trigger for ITC is that the stock tends to act a bit more funnier just closer to the budget. You see a lot of volatility coming into the stock. There is anticipation of some sort of volatility just prior to budget and post budget as well. The volatility tends to continue. But if the stock settles down at this 200 mark, and if it doesn't, the trend doesn't get damaged significantly, assuming just around that budget area, then I believe that the stock should be poised for a strong upside. If the stock holds on to this 200 mark, say by the next week, just around the budget, then I believe that they could be poised. The stock could be poised for at least a 275 to 280 over the next 1 to 2 years. So bullish on ITC, and if the stock holds on to this 200 range, I think you can expect another at least a 35 to 40% upside over the next 1 to 2 years.
Gaurang, let's just sort of extend the idea of the budget which Kunal just nudged us towards. The government, according to reports, is likely to enforce stricter regulations around consumption of tobacco. There is focus on reducing the affordability of cigarettes as well. So, owing to these regulatory concerns, how do you view the fundamentals of ITC near term and over the long haul?
So I think additional burden, if any, as far as curtailing this habit or the sin tax is concerned, that could be an overhang. But I think it comes under the purview of GST Council now. Yes, the stock does reflect volatility around the budget, and post-budget, I think we'll sit and dissect as to what kind of positive or negative impact budget has had on stocks like ITC, which are, traditionally, historically speaking, cigarette and tobacco products contribute to a large extent to their balance sheet. But on the flip side, equally strong contribution from other businesses, because this company also has various businesses under its universe, and FMCG, agri, healthcare related personal hygiene products, etc., has also seen some positive traction. While it would be fair to say that this has been an underperformer when you have to compare the likes of Tata Consumer, HUL, Dabur, Marico, Godrej Consumer Products. And incidentally, I believe HUL also, Karanya, comes out with his numbers today, if I'm not mistaken. I stand to be corrected. So we do have a positive coverage as far as ITC is concerned, but you will require a lot of patience and a longish time horizon in case if you are planning to get into ITC. I'm not saying that it will not deliver return, but in terms of time horizon, this particular stock may take a little bit of longer time compared to HUL, Godrej Consumer, Tata Consumer Products, Marico, Dabur, etc. But yes, it is a stock to look at. It may take a longish time.
Okay. All right, then moving on to our next query. This is from Twitter. It's from Sham Karani. He is holding on to Godrej Agrovet. 450 rupees was the buying price, and he is also holding on to shares of Glenmark, which we'll discuss later. Let's first address Godrej Agrovet. 450 was the buying price, Kunal, and the stock has largely been range bound between 450 to 470 to 520 odd levels. Which way do you think it's headed from here on? Should he stay put?
Technically, currently, I think the stock has done reasonably okay. I think in the last 6-7 months, 300ish was the low for Godrej Agrovet in March 2020, and the stock has just risen up to 520, 530. There are a lot of concerns for the stock. One of them, of course, is the low or the less amount of liquidity. I think the daily volume for the stock is not that huge. So in such kind of low volume stocks, there is bound to be more volatility, even if it's an intraday or a short-term volatility. So that's point number one. The second is that there are a lot of resistances for the stock, at least technically around this 550 mark. So if you look at the last 2 years of charts for Godrej Agrovet, specifically for 2020 and 2019 end, the stock had taken a major resistance at this 550 mark, and it failed to cross above it on a monthly basis. So those are some hurdle points for the stock. You bought at a lower end, so you are sitting already on profit. I would suggest either you can trail your stop losses back towards your cost or slightly higher than that, or else if you can book out your profits and then look to buy back again, if the stock breaks past or gives a monthly closing above 550, 560 zone, I think that could be a confirmation that the trend has restarted for Godrej Agrovet. Otherwise, I believe that possibility is that the stock will go through a very prolonged time-wise correction, maybe just remain in this range, as you rightly mentioned, 480, 550 approximately for the next 5-6 months.
Okay, Gaurang, your view on Godrej Agrovet?
So remain positive on the company. It comes from a great pedigree, Karanya. And this company too has different business verticals to contribute to the balance sheet. However, having said that, I think the recent news on the bird flu was a negative overhang on two companies, that is Godrej Agrovet and Vanke's, because of the businesses that they are into. I think elevated, currently hold on to Godrej Agrovet. but maybe closer to 575, 600. If you do want to take money off the table, then you can do that and maybe shift into another Godrej Group company that I just mentioned a while back, Godrej Consumers, or maybe a Tata Consumer Product also would not be a bad choice.
Okay, thanks for that, Gaurang, suggesting some alternatives for the viewer. Let's move on. Final query for this morning. Fifth one. Girish Khanna of Mumbai has written to us, and obviously the scrappage policy is in focus and soon to be cemented in its final version. He's looking at stocks that might benefit from the scrappage policy. Kunal, anything that comes to mind?
Well, who want to play on such an event, kind of a trigger, one, because the markets are smart enough to factor in, any kind of expectations from such outcome. But you have to look at the larger theme. Now, even a simple, Nifty versus the auto index charts over the last, 10 years, specifically over the last 9 years, it tells you that the Nifty auto index has grossly underperformed the Nifty, even in the last 9 months or 10 months of rally. And I believe on that backdrop, there could be a potential, strong uptrend for the Nifty auto index overall. So I think if you have to participate, I would suggest that go with a larger theme that, whether the Nifty auto index have capability to scale past about their, life highs. Many of these large cap names are still struggling below their, lifetime highs as well. Case in point, Maruti, Tata Motors, etc. So I think if these stocks show potential, then you should see much more, longer term uptrend, which I believe, should be a possibility. So I would suggest that, look for a larger theme over here. And I believe in that regards, investing into large cap auto stocks could be a good theme even at current levels.
Okay, thanks for that, Kunal. Gaurang, how about you? Any stocks that come to mind? Of course, auto is the sector. But anything specific to the scrappage policy, or like Kunal, would you also try to take a maybe larger holistic view?
Is likely to do well. Now it's a different ball game. Passenger vehicles compared to commercial vehicle. Of course, you are likely to see more traction on the passenger vehicle side as well. But this was a long pending suggestion from the government side, especially the kind of representation that were made by the Honorable Union Minister, Mr. Nitin Gadkari, on the scrappage policy. And I'm glad to see that the final shape has been given to this particular scrappage policy. I'm given to understand, Varun, and correct me if I'm wrong, I think the white paper is yet to be released in the public domain. And the effective date that I'm given to understand is 1st of April 2022, from when this scrappage policy will be effective. So it is a positive news given the, the age of commercial vehicle on Indian roads and the ratio of old commercial vehicle compared to new commercial vehicle. So it will be a win-win situation, and I hope there is nothing hidden in between the lines in this scrappage policy. So names would be Tata Motor, Ashok Leyland, Mahindra and Mahindra. If you purely want to, make a base of scrappage policy and then take a decision on investment, even Eicher Motors would be a name because they are also into commercial vehicle manufacturing.
Okay then, thanks much both of you, Gaurang as well as Kunal, for joining us this morning, sharing your market views, stocks, as well as your advice for our viewers. Slipping into a break here, more updates on the other side. Stay tuned. Welcome back. You're still watching Buy Now, Sell Now on ET Now. Time to focus on L&T. They delivered their numbers. Management also joined us earlier in the day, but let's also see how brokerages are digesting the performance for the quarter gone by. All three, Morgan Stanley, UBS and Credit Suisse, have retained their ratings on the company. Morgan Stanley has an overweight stance with a target of 1,512. They said that the continued focus on strong cash generation is a big plus. They ended Q3 with record order inflows and order book, which is another big positive. Core margins also helped by profit on sale of commercial tower is something that they have highlighted in their report. UBS maintains a buy target at 1575 rupees a piece. The book-to-bill ratio is at a 20-quarter high. Valuations are still undemanding. The working capital is also stabilizing. And ENC margin trajectory also seems comforting to the analysts at UBS. Credit Suisse maintains outperform rating target at 1700 rupees a piece. The outlook is positive with attractive valuations. Pro-cyclicality can also boost the company on the upside. Valuations continue to remain attractive despite the run-up. Record order book aided by large orders and momentum also remains strong. But let's understand what the management said after a stellar set of numbers delivered in Q3. We caught up with them earlier in the day and tried to understand what led to the rise and record high order inflow. Listen in.
Yes, I should, as I said, thank my colleagues and all my staff and workmen who stood by us to get it to where we are. We have said we will not give any predictions this year. You've been tending to ask all your questions towards that. As I said, we hope that we go through the year in the manner that you described. There will be some scars, but let's hope that we are more or less where we want it. And I'm very positive about it. Let's see where it goes.
All right, that was, of course, what's happening with L&T, and brokerages maintaining their positive stance on that counter. But Axis Bank is also in focus today. Results are expected to be fairly decent. NII should grow around 10-12% to 7,400 versus last year 6,400. Profit should be 2,750 versus last year 1,700 or last quarter 1,600. So much higher profit figure because fee income is supposed to drive that. Retail loan growth is supposed to pick up sharply Q on Q as well. Margins are supposed to remain stable at 3.56 and provisions might ebb off slightly. But even if they, the provisions are going to be slightly higher also, some might say, because of the pro forma NPAs, which we've seen with the other banks, right? So we'll keep an eye on that figure. But if we don't see a spike in provisions, your profit should be 2,750. PPOP is expected at 6,900. So keep your eyes out on this one. We'll be catching up with the management as well and bringing you the latest updates on that Q3 number. But let's move forward, and pandemic has certainly changed the way we live and has changed our consumption patterns. We caught up with Vinod Gupta, who's the Managing Director of Dollar Industries, to understand what are the new trends emerging in the textile industry and whether there are such things as antivirus clothing. Let's listen in.
What are the future trends that you foresee? What is the innovation that has taken place in the last few months post the pandemic? If you could talk to us about the emerging trends in textile industry and also talk about the fact that if antiviral fabrics are here to stay and that's where the future is.
See, antiviral fabric, of course, it's a new concept for India because we have never had this kind of a virus pandemic in last 100 years. The last problem which we had sometimes in 1918 when that swine flu that came from Spain and that had, of course, had the entire economy. Now, since antivirus products, we have also come out with the entire range, the vest, brief and trunks, and we have seen a good demand in the market for these antiviral products. Now, we understand that once this pandemic is over, we don't see that the people would like to go for antivirus products because once you are into with the antivirus products, it's really costly. If you talk of price difference between a normal product and antivirus product, the prices are around 15 to 20% higher. So whatever stocks we have manufactured, we have already done away with. Because we knew that once the vaccination is out in the market, people will not afford to buy those antivirus products because they are costly. So we have already done away with the entire stocks. The entire stocks have already been sold in the market. So we don't understand that once this vaccination process is on, there will be a good demand of antivirus undergarments.
Welcome back. You're still watching Buy Now, Sell Now, and it's time to unveil our daily quiz answer. Today we asked you which is India's 5th largest credit card issuer. The options were HDFC Bank, SBI Card, RBL Bank and Axis Bank. The correct answer is RBL Bank. The name of our quiz champions will come up right on your screen. Thank you so much for all our viewers for participating on a daily basis, and more coming right up every morning for you all on our Twitter handle. You can participate in the quiz by following us on ET Now Live and posting your answers in the comment sections of the quiz. It will be unveiled after 11:45 daily on the show. With that, we're timed out on this edition of Buy Now, Sell Now. Thank you so much for tuning in.